Sharp EFS swap. So I failed to call our name first, but just busy with this too. And very nice structure. Very nice. Very nice structure. And I want to let you know something that the structure of BTC and Ethereum, as earlier predicted yesterday, it's actually doing exactly what I wanted to do. And we are very hopeful, we're very optimistic that our areas of buy will trigger. Now, I have a strong overview on where price is headed, and I have here as a strong demand flow. And I will say why there is a very strong demand flow. There are two critical levels to watch. BTC is very much bullish, but be careful of BTC for as a falling knife. When a knife is falling, just be very careful with it. So you see, structure at this level, break of structure and retest, break of structure and retest, break and structure and retest, break and structure and retest. Now price move up, it will return here. The next reaction will be at this level. Okay, and if uh, if it becomes a massive institutional correction, they will edge it down and bring it again to this level where you have a strong weak rejection. This level indicates a strong institutional rejection. So at this level, you technically have a price at this level, but the reason here might be avoided. It's because of the floor. We have a previous supply roof becomes a demand floor. A break of that structure, we have an ascending trend line. We cloned that structure and brought it to this area of rejection. Price will likely come back here to react, and in a more aggressive drawdown, will be at 48.761.97 level. So that's technically what we see based on our strategy. That's what we see based on our strategy. So the next thing I want to see is I want to see how price reacts on daily to this level, and I'm hoping for a daily rejection at this level. So I'm going to place my vertical root strategy on this level, and if price returns here, I want to see a potential rejection on daily. So that means we are forecasting a daily rejection in 96,092.99. So we're going to see how price reacts at that level. So we're hoping for a daily rejection on this level. Now we also explain it why we're expecting a daily rejection on that level. We see price updated a supply and shortly turn into a demand. On this level, we have two demand flow on this level, making it an ascending trend line, and it has held price actively that gave us the opportunity to try to create a new high. On that note, you will see that price have returned here to create here a demand flow, return here to create here a demand flow, giving us an ascending trend line. And we return again with a strong rejection at this level. These 3 points have made an ascending trend line, affirming the structure. So what we want to see is a tapping into 96,092.99 for sniper entry. So at that level, market will respect that area. But I cannot say if there will be a buy trigger at that level. But there is a very high probability that at that level, market will respect the ascending trend line. The ascending trend line are giving you evidence, demand one, demand two, demand three. And a breakout of that structure will ultimately mean a more bearish day for BTC. But there are other things I want you to know. We have other litmus tests. Another litmus test is a descending trend line breakout. The descending trend line breakout coincide with this structure. So this descending trend line breakout will be monitored actively, and let me change the color and also explain. Now look at what price have done. Price create here a supply roof, our current all-time high. Another descending structure after price creating that all-time high. Then we have a breakout of that structure and price returns to retest. So ladies and gentlemen, price might come here and continue uptrending. This is case two. We have discussed case one. Case one is a case where price return and break the structure. Case two is price return to a broken descending trend line. It returns on a retest and continue to upswing. So this is what you are about to experience today. So we will watch how the daily candle close. If daily candle close, tapping into that area, you are going to have rejection. There will be rejection at 98, sorry, 96,092.99. That will be daily rejection to close the day. But however, but however, if we have a break of structure, it meaning that market is no longer interested in buying. Please bear in mind, if price breaks out from this structure, buyers are no longer interested. If you want to continue to buy, it's up to you. That's your choice. But I'm interpreting the structure based on what we have seen over a period of time. So if market comes and we have a daily rejection, that will be nice. Meaning tomorrow morning, as market open, we will also watch. If that tap was to respect the structure to continue selling, or to tap the structure and continue buying, if the market opens and it continues to sell, it means that the respect of the daily close was to break it the previous day, the next day. So two things are going to happen. Today, tomorrow will define a moment for BTC. If price returns at that level, by today, tomorrow we see an upswing, please go long. Go long. Means the market is buying back. And if the market buys back, it's going to create a new all-time high. And do not forget, our good president, President Trump, is a fan of crypto. He's a very good fan. He's a very, very good fan. So if that happens, we could see BTC. The next touch of BTC, I'm sorry to tell you, is going to be around 126K. So this might be your last opportunity. If price taps into 96, 09299 and respects it and confirm it as a buy, and by tomorrow we'll continue to see a buy candle, my brother, find opportunity and enter buy. The next place where you will see yourself is in 126,000. That is the structure of this market. Why am I saying so? What give me the impetus? Now look, we updated a demand floor. Demand floor 1, demand floor 2, demand floor 3. And when we close the structure gave us exactly the roof where price has reacted, indicating that the market is creating a bullish ascending channel. So on that bullish ascending channel, all it's doing is what? Updating higher highs and higher low. So if that is what the market is doing, the market created a small higher high, higher low, higher high, higher low, model of all high, price return, higher low, create another high, return back. So if the market creates this high and return this low, if it's taken back, it's going to be at this level. This is what I see. If you have a different opinion, please feel free. Let us see. Let us know what you share. Let us know your perspective. Let us know what you think. But this is what I see. This is what I see. So we'll look at a reaction at 96, 092.99. On that level, I want to see a reaction. To be honest with you, a breakout of that level will look very nasty. So if price breaks out from that level, expect a more bearish days. Then the next thing you should be thinking of, a drop into 70K zone, 69, 70K zone. But before that happens, I have something I want to share. I have a strong demand floor. So on that strong demand floor, I have confidence in that demand floor. I have confidence on it. And even if we have a strong bearish drop, it will respect that structure. So let me get some of these things off so we can actually see clearly what we want to do. So we have a strong break of structure at this level. At this level, we have a strong break of structure. So you can see this structure. So I want price, if we are breaking out, price will come down here first at 84K level. So if we break out from this descending trend line, we have already broken out, indicating that we're going to buy to create a new high. For no reason, we have reluctance in buy. So now our litmus test is going to see a price breakdown from that descending trend line. If we break down, then the next buy position will be at this descending trend line. This descending trend line, I will also explain its price action. Price create here a supply roof, return here as a demand floor, return here as a demand floor with a strong wick, bearing weakness to the descending trend line. So on technical, if price returns back to that zone, we are going to have a buy trigger on this line. So you have a buy trigger on this zone. So put your buy order. Put your buy order. If you see this line break out from this black descending trend line, don't worry yourself. The price will continue to come down. As it continues to come down, you enter back here. While you entering there, the market is not creating a chart pattern, an expanding triangle. So that could be a case like this where market is trying to change direction, and we'll see the market now move higher high, higher low, higher high, higher low, higher high, higher low, and fail to update. Market might return here and go back to a new high. So this is case 3. So patience is key and critical. Let's be patient. Let's allow people who are doing this thing, let them finish what they are doing. When they finish what they are doing, we know the meaning of this dance. We know where to land. So if they break out from this descending trend line, don't bother yourself. If they break out, which I think is unlikely, the market might respect this level, 96,092.99 for a buy. But if you are entering there, you need to guide yourself with a very strong stop loss. Guide yourself very well. You need to stay tight. Don't stay there and lose. If you stay there and lose, it will take your money. The probability is very high. But what I want to see is a breakout from that structure, a daily breakout. If I see a daily breakout, okay, let me share something with you. Let me share something very, very symbolic on daily. Now you see, we have a daily breakout from this level. Why BTC respect a break of structure? You can see here we have a demand floor. And why I always talk this every time about the daily break of structure, especially the body of the candle. Now let us look critically. You will see that on daily time frame, that market have created here a demand floor. We have a demand floor at this level. Price return to respect this demand floor while creating a supply rule. And yesterday candle broke that demand floor. Today candle came and retested a broken demand floor to become a supply rule. And today candle is selling. Ladies and gentlemen, it has formed a double top. You can call it a double top, you can call it a triple top. It means that more bearish days are coming, meaning that price at this level might not hold. The probability is very, very high that a buy at 96,092.99 might not hold. The reason is because there's a break of a demand floor on daily. After price updating first demand, second demand, break of structure, yesterday candle close, piercing that demand floor, today continue on bearish pulse. So that bearish leg could technically push price below 90K zone. The probability is high. Everything in trading is probability. But we trade with technical details. The structure of the market is what tells you the sentiment of the market. You cannot get anything different from the sentiment of the market, and the sentiment is in the chart. So we look at the roof. Let me also explain the roof for you and how price have held actively on this roof. You see, we have price updating the roof. Body of a candle close December, body of a candle close January, and price return to retest with a 2-day week rejection. The 2-day week rejection formed a double top and the market is going down. This going down might ultimately return this price to this level. Sorry. So this is the level I am anticipating. This thing they are doing, they might bring this market to this zone. It's a very high probability they are coming here. There's a very high probability because the market have updated the roof on daily, updating the roof in the month of December, return in the month of January, and return again the month of by close of January. Daily rejection, day one, day two, rejected the same low, and the market is going down. So let us watch. Let's be patient. Let's see what the market will do at 96,092, 96 level. We want to see what it's going to do at that level. If price comes at that level and respect that buy order, ladies and gentlemen, prepare to go long. The reason for going long is because the market has created an ascending trend line. An ascending trend line price action coming from October 2024. Demand floor one, demand floor two, and price return in the month of January to respect it. The 3 points are making an ascending trend line, affirming the structure, the power, the potency of the trend. So what we expect is if price comes back and show us a considerable respect to that structure, then we readjust and wait to trade in direction of the rally. But the breakout of that structure will ultimately bring price to the green zone. The green zone is also a valid structure. So in that green zone, you see price in the zone of 85K. That would be another good opportunity to get into a buy rally. That would be a very good opportunity to get into a buy rally. That will push you back to go and retest a broken demand floor again, and it might continue to sell from there, or the uptrend will continue. So this is what we see for SAU USD. And put your sell order, put your buy order ready. So at this level, if we have a bearish drop, I want to go with 85K. I'll be on 85K for a buy. I'll be on 85K for a buy today and tomorrow. So if we have a massive bearish drop, I'm going on buy 85, 85K, 85, 0, yes, exactly 85. buy order at that level. I'm going there. See, that's the demand floor. So I'm just saying my order, buy order. So let's do that. Let's do the market might come to that zone. Let's see if it triggers. If it comes today, come tomorrow using our vertical root strategy. On our vertical root strategy, it's giving us 85,187. So let's see what it does. Let's see what 96 the level does. If it comes there and respect that structure, that would be nice. But I did say it, and if you watch my previous stuff which we sent on this, we anticipated this drop, and we are very hopeful that the truth is that there's going to be double confluence. There is double confluence at 96,092.99. An ascending trend line meet a descending trend line. That's an opportunity to go long. It is an opportunity to go long. It's a very good opportunity to go long on that level. Look at the ascending trend line. Look at the descending trend line. The ascending trend line, I will call it ATL. Let me call it ATL. This ascending trend line one, another ascending trend line two, and we have descending trend line DTL, and we have another descending trend line DTL. So these are two descending trend line we have. So if price returns here, it will be a double confluence. So at 95 level, honestly, 95 into 96, there might be a trigger, and we are looking at it that way. We're looking at it that way, that this price, the 96.092.99 into 95 might be a buy situation, because here the market is going to create a confluence at this level. So except buyers are not interested. If they are not interested, we'll have a breakout structure followed by a retest, and we'll continue to sell down until we get into 95K zone. At 95K zone, market will trigger a buy based on the structure of the market. So I think we are done. Shall we first off for BTC?